I will do I am going to get together a webinar, though, a GAN webinar down the road. Okay? Sue say, Nick, other than earnings, are there any other news events for companies you ever look at? No. No, I don't even care about that. I just care about the chart. News events mean nothing. Oh yeah, I'm very well versed in GAN studies. So I'll be giving a class on that probably sometime later this year, for those of you that want to attend. No, I mean, I designed a master calculator, but I'm not, we're not going to talk about that today. But I did build that. All right, so let's go over to what we call max extension. Now, this technique I discovered probably well over 10 years ago. I just brought it to the public last year for the very first time. And when I say the public, I mean the members. Okay? Max extension is very, very good because when a stock becomes extended on a chart, you know it has to pull back. Everything needs to revert right back to its 20-day moving average. Now, this tactic can be used on all time frames, 10-minute, 60-minute charts for intraday trading, daily, weekly, monthly, on the bigger time frames. Okay? Traders can often buy or even sell short a stock using this method, provided you have factors. This technique does require factors. But one thing about this technique is that if you ever get a big move, you know where to get out, and you can get out at the top. Okay? How many of you caught that ASML trade with me? Okay? I took this trade right here, ASML. How many of you caught that with me? Anybody? All right, good. A lot of you. Okay? A lot of you. So right up here, I knew that we had to get out of the stock. It was going to pull back. Okay? Off of this technique. Okay? Off of this technique. Trade like an institution, not like a beginner. That's what this will help you do. Okay? Also, you'll know when to get in, when to get out of stocks, when stocks are going to form bottoms, when stocks are going to form tops. In my opinion, that's information that you just can't buy. You can't get it anywhere else unless you know how to do this. All right? So let's go right into the charts. Let's show you how it works. So here we have, well, let me do a little reading here. When trading stocks, commodities, currencies, or anything on a price chart, it's important to remember that price can never trade too far from the 20 simple moving average on close. Try and think of the 20 moving average as the shoreline at the beach. When the tide goes out, it must eventually come back in. When trading the equity market, it's important to use this technique with the simple 20 moving average on close. Does everybody understand that so far? Okay. Here we have a chart of Baker Hughes. All right, this is just a 10-minute chart. So here's how this works. You take a look at the past. As long as the 20 moving average is somewhere in the same vicinity, you look at when the stock got most extended. And all you do is take the high, draw a straight line down to the 20 moving average, and you calculate that distance. And you know that the market is going to probably stall out around the same distance. In this case, $1.71. Here you can see if you take the high to the low, we get a $1.96 spread in between the 20 moving average and the high pivot. We know this is overbought. Now, if you can find a resistance level back here or some other secondary factor, you can actually short the equity. Okay, but you know it needs to come back in. Now, by some chance, if you happen to be long the equity, you're going to sell out up at that upper level. Okay, that's the best way to do it. All right, so you know price can only go too far away from the 20 moving average. Here's another example. This is a chart of GLD. Here's the high to the low. It gives you $17.44. Pivot high to pivot to the 20 MA gives you $17.44. Look here, price goes from the 20 MA down here. You go through that, you know you got to get a bounce. And look at the GLD, starts to rally back up. Okay, let's take a look at the next one. Here's a chart of TLT. Same stuff. Doesn't matter what it is. Pivot low, pivot high, calculate that measurement. Pivot low, pivot high into double top. Can you short this up here? You have a double top, 95, max extension. Absolutely. What would your stop out be on this, Johan? What would your stop out be on this? Yeah, 95.60, sure. Anything above 95. Especially, and if you get it here, where it has come all the way back in, you could just use the high as a stop out. Well done. Excellent. Next, we have a chart of Whirlpool. Okay. Max extension from here all the way up, $7. Max extension, $7 into double top, also into 92 even number. Can you short this? Can you short this? Absolutely. Absolutely. Okay. You could risk $1 or so from entry on close as a stop out, or put a pivot high above there on stop out. I mean, look at this thing. Look at the pullback on it. It's tremendous. All right? Happens all the time. Here's a chart of Google. 262 points from pivot high to the 20. Draw the line straight down. Here we get to around 256 points. We know Google's done going down, and look at it, starts to rally back up. Okay? It's going to be right in that general vicinity. Markets love to do what? What do markets love to do? Come on, repeat themselves. Yeah, they love to repeat themselves. It happens over and over and over. It's just that we don't realize it. The people don't realize it. Here we have a chart of crude oil. I did this live for an institution. Live. When I did these slides, I did this live for an institution. They paid me. They said, hey, can you show us, some of your techniques? I said, yeah, I'll show you this technique. I did this live for them, and I recorded the next day. I said, here, crude oil, is going to pull back tomorrow. And you had to see the head trader over there goes, that thing's a monster. It's going up every day. It's not pulling back. It's going higher. I said, crude oil is pulling back tomorrow. He said, how do you know this? I showed him the technique, and look what happened to crude the very next day. Very next day. Boom. It was extended, gapped up. Look at that sell-off. Okay? Did this live for an institution. Here we have a chart of Broadcom. Daily chart. Pivot low. Draw a straight line up into the 20. Get that distance. Look at this. Straight line down from the 20. It can only go too far. That's its movement. That's what it has in the cards. That's it. Okay? Can't go anymore. Next, we have a chart of UAL. Pivot low, draw the line straight up, right into the 20, do the calculation. Same thing. It's overbought right here. Got to come back down. Same stuff. Markets love to repeat. Okay? This is a 60-minute time frame. I use it every day. Here's a chart of Apple. Now, this is one where it was a little bit tough because Apple, if you take a look at the 20 moving average back here, was around $150. But all the way up here, it's now at 500. So you don't have a good reference point. But what I did have, does anybody remember this? Me calling the top in Apple right here? Anybody with us back then? I told you guys. Doyle was with us. Doyle, remember in the when you came to the Tampa trading room with us? All right, Doyle was at Tampa trading room. I gave that to them first. I said Apple is going to collapse. Stock was almost approaching $700. I said Apple will pierce 700 and it will collapse. And look what happened. Boom. So if you took this high and you drew a line straight down, you're going to know that it was around here. We pierced it, and look at the move down. Okay? So I just knew a couple of reasons for Apple. One, we had a negative divergence, and I didn't get to indicators yet, but I'm going to get to that next. We had a negative divergence on a big weekly chart for Apple. But what does 7 represent? Anybody know? Change. Change. And everybody was loving Apple. I mean, like it was no tomorrow back there at this level. Now Apple's theoretically even higher than 700, but everybody was just loving the stock. I remember even in that conference that we held in Tampa for 1 week, some of the members were arguing with me there that Apple would not break down. It was going even higher. And I said, all right, I'm telling you, Doyle can testify to this. I said, the stock's about to tank. And you see what happened. So it's pretty incredible. But if you know max extensions, it's a powerful, powerful technique. In fact, Caterpillar was another one. Watch this one. So I think we did this on a weekly, maybe it was a monthly chart. I can't remember. I hope I find it here. But we did this for the live trading group. And the guy goes, well, do Apple. Show me Caterpillar, being a wise guy. And I said, all right, I'll show you Caterpillar. So I went to Caterpillar. I think this was it. Bingo. So I showed him. I said, that's all Caterpillar can go up. And look at that, how that works. Look at Caterpillar, just came right back down. So you guys know max extension for Caterpillar, And the 20 moving average is not far off. Here the 20 moving average was at 63. Here it was at 77. So you're not that far off. It's going to be pretty close. And look at how perfect, that max extension worked out. This distance right here was exactly the distance to the top. And markets love to repeat themselves. When I first discovered this, it was almost like I thought I discovered fire. I saw my name in lights. I said, "Whoa, Nick Santiago's name is going to be in lights," but it didn't happen to work out like that. But in any case, it is pretty neat to see how it works. Does anybody want to give me a stock? We could try. Give me a stock that's liquid. Don't give me one of these single-digit stocks. No, I don't want to use that one, Dan. I'm in that trade. Win? Let's see what we find for Win. All right, so Win, a little tough on this one because the 20 is a little bit different right now. But this pretty close. Let's take a look here. Yeah, see its price is a little higher, but you can see it's pretty close. That's a tough one because the 20 moving average is so much higher now. Here it's below 100. Here it's, a 160. But this one is real close right here. That's pretty close. Hard to do it otherwise with this one. What's a stock that's been? Let's do Microsoft. Right, stock's been around a while. Well, I don't know if we're gonna be able to do that one with 1999 in place. I don't think we've ever had anything close. Let's see. That 3D is no good to do. I mean, maybe, but maybe it is. I'll try it. Now, you don't have enough here. This doesn't have enough time. But here, you can use it. Watch this. All right. Yeah, bankrupt. That's not a good one. Let's get I actually think this is a level where you can own this stock right now for different reasons. Let me see what else. IBM. Yes, that's a good one. IBM. All right, so let's take a look at IBM. I'm just using monthlies here. Oh no, we got a better level here. Remember the 20. The secret of it is the 20 moving average has got to be somewhat in close proximity. If the 20 is below the $100 level and then now it's at 170, it's hard to do. That's the only problem. So here is the all-time maximum. Yeah, so you can't do this one right now, but we could do it with probably one of these levels. All right. So here you can see, look at that. Boom, picked out the low. See that? You just got to make sure the 20 is in the same proximity. You can't use a 20 that's trading below the, too far below. It's got to be, around the same place. Look at that. Gave you the dead low. Yeah, I got to trade on that one. I don't want to do it on that one. Anybody else? Try Verizon or something? Well, have nothing going there. Just see. I usually see this by eye right off the bat. That might be too small. There we go. I'll crook it. Let me make it a little clearer. No. Moving average is too far. Okay. Oh, here we go. This is a good one. 20 right there. Boom. Pretty close. Pretty close. Moving average still a little bit of a distance, but that's pretty close. So it's a good proximity. I'm just trying to find something that's in the same range. But anyway, you get the idea of it, okay? You get the idea? Yeah, you could use it for the spiders, sure. I don't see why not. But the spiders have never been, so you can't use it for now, right? You can't use it for now. You got to use it back in the past. We could probably do it for here. Boom, look at that. It's pretty much perfect. See that? Market just repeats itself. Maximum downside. Yeah, the moving average is different here. So now we're up at this level. It'd be hard to do it now. Yeah, you got to have the 20 moving average in the same proximity. A moving average at one big level, then a different low level, it's not going to give you the same reading. All right? Yeah, Google we did already. Google's done. That worked. Yeah, that was no problem. I got to use Google L. So you could just Google right here. This was pretty easy. Look at that. Bingo. Now I don't know if it would be good because, yeah, see, the 20 moving average is in a different place now. Google L 20 moving average here was around 242. Here it was 258. This time around, Google moving average is at 470. Can't use that now, but you can see back here how it worked out. Okay, but you get the idea of it. It's a powerful technique. You can use it all day long. All right, let's go on. Anybody have any more questions about this? I think I covered it pretty well. You guys are giving me all the trades. I don't want to do the ones that were in trades. Give me stocks that weren't. But you got to make sure that 20 moving average is in the same proximity as the first extended move, okay? That's the trick to it. As long as you do that, it's fine. Okay. Vishal saying, what should be the profit target on max extension? Well, you're going to just follow the same rules, Vishal. You trade it down into the support level. That's always the rule. Okay? 3 to 7 bars, trade it down to the support level, trade your stop loss. Use fibs, right, where your fib retrace will pull back to. I mean, you got to do all those kind of things. All right, let me just get through, raise some of these questions here. I think we got through all of them. Okay. We're going to cover the commitment of traders report. We're going to cover indicators. Yeah, we still got a little bit to go. All right, so what we'll do now is we'll take our last break of the day. Okay, so 4:39 in the afternoon. We'll take another quick 5 minutes. All right, and then be prepared. We're going to finish up. All right, we're going to go strong, probably right into 5:30, 6 o'clock. All right, we'll take a quick break. Don't shut anything off. Then we'll come back and we'll finish up right into the end of the trading day. We still got indicators. We still have commitment of traders report. We have cycles, and then we'll talk about 2015 forecast, and then we'll be all wrapped up. All right, so we still got a little bit more to go, and then I'll show you guys how I set up my screens and everything like that. So still got quite a bit to go. Okay, take the last 5 minutes, and we'll be right back, and we'll finish up. Don't turn anything off. Leave everything running. Talk to everybody in just a couple minutes. Okay, I do not use it intraday at all. All right, everybody. Hope you're all back. Hope you're all back. Give everybody just a couple seconds here. We're now going to talk about indicators, which I do not use very, very much, but I will show you how I do use them and when I will use them, okay? But I do not use them all that often. So I will cover that now for you. All right, we're going to talk about indicators. Give everybody just a couple seconds to get back. All right, so one indicator that I like, and pretty much the only one I even use, would be a stochastic. Some of you could use, a MACD. Some of you will use a stochastic or an RSI or one of the many, many oscillators that are out there. But I like the MACD. It's a moving average convergence divergence. Here's the moving average. Here are the readings I use, 12, 26, 9, okay, on close. So it's very, very simple. A lot of you may like a fast stochastic, a slow stochastic. It's all the same thing in my opinion. The only time I'll even look at an indicator is when price is making a double top or a higher high. If it is not making a double top or a higher high or a double bottom and a lower low, I will not even look at it. Pointless to me. Okay? I do not use it intraday at all. Okay? So here you can see price basically made a double top here. Not perfect double top, but just about a double top. You can make a case for an in-spirit of double top, but notice what the MACD, if I could ever draw this line in straight, notice what the MACD did here. Take the blue line. You got a lower blue line. I like to use the bluer line because it seems to be the faster one. And you're going to see a lower high. That's telling us there's going to be some distribution, and the dollar came in. Now, we were expecting the dollar to pull back. It's now pulling back. Looks like it could be bottoming out soon. I ultimately think that the U.S. dollar index, for the most part, from what I can tell right now, is probably nearing a pretty decent area, a little bit lower from here, around 89, maybe 87 on this continuous contract for a bottom. So right around, somewhere around here. If you're looking at the M contract, I would say it's probably a little bit higher. But either way, this for indicator reasons, this is where we're going to look when it's making a new high. Now I want to just go back and take a look at a weekly chart of this. I'll also show you some past calls we made. think here we go. This was one. Right here. So this made a lower low. And then you're going to see that back here, I think we made a higher low. So there was one where the dollar put in a bottom and started to make a bit of a move to the upside. Also, if we roll this back a little bit more, I think we have a few others. Here, price made a new high. Here, price made a lower high. And then you can see how the dollar rolled over. Okay. I'm picking on the dollar because this is one that I like to use it for. I think it's pretty good use. Here, dollar is making new lows. And here you can see we make a higher low, and the dollar catches a nice little pop. See the dollar's making new lows here, and here you can see we made a nice high, and the dollar catches a nice pop. All right, so you can see it's many uses. But again, I don't use indicators all that much. I don't love them. I do think that they can be useful. I'm not saying that they can't be. I'm just saying that the only time I will use them is if I have a higher high, double top higher high, or a lower low. Now I'm going to show you this SPY, which is what we have going on right now. And you're going to notice the market, Spider's made a marginal high. But look what we have going on here. We've got lower highs on the MAC. So this is problematic. Now it has not closed below this midline right here. But once that happens, that could be real troublesome. And I think this is going to present problems for us in the second half of 2015. So that's just something I think is worth noting, and you know, we'll see how it plays out. But if these indicators are any sign of what can happen, it can be troublesome. I want to show you Apple. Let's get rid of that. And I'm just going to go back to where Apple made its high. So this is split adjusted. So here Apple made a higher high, and this is what I was talking about to you guys earlier when I said the MACD was also giving me a negative reading. And I showed this to the group in Tampa. Some people just didn't want to believe it. But I said Apple's going to tumble. And sure enough, look how Apple made that higher high, and the MAC was making a lower high, telling me the institutions were distributing the stock. And sure enough, look at the rollover here. It went from 100, you know, split adjusted, all the way down to, you know, $60. So that's a huge decline in such a short amount of time. Lily's saying, if you use MACD for small time frames, no, I don't use it intraday at all. So I will not even look at it intraday. It's only on. I predominantly like to use them only when I see a higher high or a double top, mostly a higher high, or a new low or a double bottom. That's the only time I'll really even look at any indicator. And the only one I really use is the MACD. Okay? Yep, just look for divergences. That's it. When you make a new high, just look for divergences. And it just alerts you that something's coming. It doesn't tell you the exact date or anything like that. It just tells you that something's coming, something's brewing. Okay? Yeah, daily. The daily for a smaller move, Lucas. Weekly is bigger time frame, so you'll get a bigger move there. Mike saying, Nick, doesn't MACD lag behind markets for Apple? MACD topped after Apple top? No. I mean, it is a lagging indicator, but it was telling you all along that when this could not make a new high, it was telling you there was distribution. Now, I had the high pivot for other reasons, but you know, it was definitely alerting us to trouble. It's not going to give you an indication to the minute or the day, but it's going to tell you that there's trouble on the horizon. That's all it is. Joseph Stephen saying that, can you use the 20-day moving average intraday? Yes. Yeah, you not the 20-day, you use the 20 period moving average. So if you're looking at a 10-minute chart, yeah, you could use a 20. I have it in there. Have the same moving averages in on every chart. The blue line. Yeah, same stuff works. Yeah. Richard saying, Nick, what do you think about money flow indicators? Kind of the same thing. You know, they're all kind of the same thing. I don't love them. They're all kind of the same. Here's a good one on Apple on the daily. Look at this. Look at that. So if you just throw the look at that. Pretty much nailed it, you know, so that's pretty close. So that was a good one. All right, so that's all I use. Any questions, guys, for indicators? Any other questions? All right, you guys see how I do it. Pretty simple. Only looking for divergences. All right, you got to be making a new high and a lower high on the MAC. Then it's good. Can give you some insight. All right? All right, let's get rid of this MACD. Let's go over to the commitment of traders report. All right. Now, Commitment of Traders report should never, ever be used as a sole product, all right? It never, ever is that important. So let's go to the Commitment of Traders report. To get to this, write this down. You're going to go to cftc.gov, okay? To get to this report, you're going to go to cftc.gov, and you're going to go right here, Commitment of Traders. All right, it has a lot of information here. Most of it's useless. Right here, Commitment of Traders report. Everybody see that? And you'll tab right there. Then below, you'll have a whole bunch of reports. You're going to go to Current Legacy Reports. As you can see, these are already highlighted because those are the ones I look at. So Chicago Board of Trade, you're going to get wheat popping up first. Below it, you get SRW. Here you get wheat, HRW. Okay, here, you can scroll down. You got corn, you got oats, you got soybeans. All right. Now, how you read this is very simple. You're looking at the commercial money. All right. Commercial money is what's important. This is going to be hedge funds, mutual funds. This is non-reportables. This is you and I. Okay. Commercial money right now, they're long 185,000 contracts. They're short 108,000. This week they added 7,700 to the short side. They removed 262 from the long side. Net, they're still heavily short. Okay. You are never, ever going to trade off a Commitment of Traders report. Okay? It's just going to give you a heads up. That's all it's going to be. It's like a MACD of reports. All right? It's just you're always going to use the chart. The charts are going to always be your first line of defense. The Commitment of Traders report, it's just going to be something to look at. It's going to be something that may give you a clue if you don't see something. All right? That's all it's going to be. Now, who is the commercial money? They're the people that need to take possession. Right? So who needs to take possession of wheat? Anybody? Who would need to buy some barrels of wheat, or some bales of wheat, I should say? Kellogg's, right? General Mills. Anybody that is going to use the product is generally going to be someone that is going to be a commercial, okay? So they're telling you right here, they need the commodity. They're going to buy it, all right? That's what they're doing, all right? That's how you want to look at it. That's how you want to view it. Now, if you scroll down a little bit more, what you're going to see here is that, you got the 10-year U.S. Treasury note. You're going to see right here the commercial money took off a lot of their longs, but they're still net long. Took off a lot of their shorts, but they're still short 1.8 million shares. They're long 2.1 million shares. All right, so that tells us yields on the 10-year could pull back a little bit. Okay, let's take a look at the Dow Jones. This is Dow Jones Consolidated. They're short right now. And they added a little bit of shorts. This comes out every Tuesday. The report comes out on Friday, but it's from Tuesday's close, okay? Here you can see, now is there a big difference between 28,000 and 38,000? It's 10,000. It's a fair amount. They did remove some of the longs here, so that's telling us the market could be a little bit vulnerable. Now, you can get a lot of mixed messages, all right? If we go over to, say, Chicago Mercantile Exchange, we could scroll down to the spiders, and you'll see here S&P 500, they're long by about 13,000, all right? So the commercials are 76,000 long, 63,000 short. They did add some shorts, and they did add some longs. So it's telling you, hey, some people are short, still they're net long, all right? You scroll down a little bit, go to the NASDAQ 100, consolidated. You do not want to use the minis, all right? What you're going to see here is that they're short, 50,000. They took off 3,800 longs. They're long 39,000. They did remove 1,700 longs, but net, these guys are short. That tells us, markets are still going to be choppy because we don't have everybody on the same page. These guys are short. They're long the S&P and they're short the Dow. What's going on here, right? So you want to just be a little bit careful. Know that we're still in for some turbulence, at least in the near term. Now, if you ever see the markets really start to put in big long positions or something like that, you want to take note of it. And you always want to refer back to your chart, okay? This is not contrarian, Dan. No, it's not contrarian. So let's go back to the report, and you could go over to the Commodity Exchange Incorporated, which we will find silver, gold. Right now you can see the commercial money. They are still net short silver, 106,000 contracts versus 38,000. They added 429 longs, and they added 1,282 shorts, okay? Now, who would be a commercial in the silver market? How about a silver miner? Right? Silver miners, gold miners, these guys are the biggest commercials there. Maybe some electronics you on, but it's going to be really gold and silver miners. Sometimes you do get central bankers in there. Okay? They want to take possession. All right? So if you scroll down a little bit, go over to gold, and you'll see here they're short. They added 10,000 in the short line. They're long 144,000. They added 6,700 to the longs. But the biggest shorts in this market are the gold mining companies because they're so afraid they're not going to be hedged if gold does decline against them. Okay? Do you see that today? Do you understand that? So say you're a gold miner and the price of gold goes down, you're going to be scared that the price of gold is going to go lower. Okay? Same way, you know, you take a look at commercials in oil. Who would a commercial in oil be? ExxonMobil, right? Not necessarily an airline. I think Delta has a refinery, but it would be ExxonMobil, Chevron, Conoco, big integrateds, right? Sometimes refinery companies, right? Valero, Tesoro. Yeah, definitely, right? People that need to take on, you know, the commodity themselves. They would be the commercial. Okay. So if you take a look at crude oil, this is on. Well, here's nat gas, right? See, they're long nat gas. Nat gas has definitely been moving a little bit higher. If you take a look at, let me just go down to crude oil. We call West Texas WTI. Got a lot of different swaps here, but let's go over to here. It is crude oil. All right. So you got crude oil, light sweet crude. Commercials, they're short. All right. The longs are still way lower than the shorts. Short commercial shorts, 926,000. The longs in the commercial, 604. They did add some longs. Okay, but yeah, they're way short right now. So it tells us the crude oil move is probably, you know, getting close to running its course. Probably has a little bit more because of the trend. Yeah, I mean, I wouldn't short crude right now because of why. Here's the trend, right? The trend is up. Yeah, the trend is up. But once it starts to break down, you start to get lower highs and bearish patterns. You can short this again. Okay, and the dollar, yeah, Vishal, exactly. The dollar has been weak. Once the dollar bottoms out, it's over for crude. Okay? So that's the way it works. That's the way it works. Does anybody have any more questions on the COT report, Commitment of Traders report? You can find this by going to cftc.gov. All right, you will not get slides or anything regarding the Commitment of Traders report. So hopefully you took some notes. Vishal saying who would be the commercials for the S&P 500 and NASDAQ? Yeah, the big institutions, money center banks, right? J.P. Morgan, Goldman Sachs, UBS, Deutsche Bank. All right, all those guys. All right, we're going to move over now to cycles. All right, I'd like to end it off with a good, fun session, and we're going to talk about cycles. Yeah, I don't know what they are today. I don't have inside privy information to that, so I don't know what the central bankers are via gold or silver. But let's get into cycles now. And what you're going to see here is I'm going to show you guys right now how I predicted the 2007 top virtually to the day and to the price, which was a little bit of luck, but 2008 collapse, which we knew what was coming. All right, so I'm going to show you guys exactly how we did that. Keith saying Nixon's the shorts are much more in longs than in gold and silver. Does that mean they will go down? You mean the short? There's much more short money right now in gold and silver. They've been like that for a long time, for years. So it's not as bad as it has been. It's not as bad as it has been. But you got to check it, right? So remember, the commercials themselves are the short. You know, the gold mining companies are basically the bulk of the shorts in there. So you got to watch that every week and watch for changes in the report. Okay. I watch it every week. Every Friday it comes out at 3:30. I look at it, and I'll update you on anything I'm seeing. All right, we're going to talk about cycles now. So earlier we talked about 3s, 7s, multiples of 3s and 7s. 3 plus 7 is 10. 10 is an important number. Does anybody know why? We have 9 digits. Okay. After that it ends, and we go back to the infinite circle. Okay. Very, very important. No beginning, no end. Multiples of 3s and 7s, multiples of 10s. 10s are very important as well, right? Right now we're looking at a 10-year cycle that almost is repeating just like it did 10 years ago, All right, 2015 is looking just like it did in 2005. Study past cycles. 1907 stock market crash plus 100 years. 2007. 1880 stock market bottom. Okay, was in 1880. You had a 7-year depression. Okay, add 50 years, you get 1929. All right, 49 years. You think 49 is important? How many people think the number 49 is important? Absolutely important. 7 times 7. Yeah, that's an important number. Extremely important, right? 7 times 7, 49. If you take the Advanced Cycles course, I will show you more about the 49s. All right, let's take a look next, the power of 10. All right, 100-year cycles, 10-year cycles, multiples of 10s are very, very important. How about 70 years? You think 70 is important? Absolutely. Oh yeah, 70 is extremely big time important, not even regular important. 70 is incredibly important. All right, very, very important number. All right, let's get into how we predicted that, and we're going to talk about how we could predict future markets as well. All right, so here we have 2 pivots in the year that are very, very critical. We actually have 4 or 5, but we're going to talk about 2 of them that I believe are extremely important. And one of them right off the bat is March. Now the month of March is extremely important for one reason. It is generally the 3rd month, right? So if you take a look at a Gregorian calendar, January is the 1st month of the year. February is the 2nd month. March is the 3rd month. But back in ancient times, March was the most important part of the year. In a lot of calendars, March would be the start of the new beginning. So you would come out of winter and you would start spring. The Nile River in Egypt would flood. We would get crops. They would get fish. They would get all sorts of new beginnings. So March was incredibly important. Okay, October is also very important because this was harvest time. Okay, October is the 7th month from March. Okay, October is also the month where you get the most panics. Okay, it's also considered the 10th month of the Gregorian calendar. So October and March, 2 pivotal months. We also have the month of May and July. Okay, how many of you have heard the term sell in May and go away? Okay, May is the 3rd month from March, March being number 1, April being number 2, May being the 3rd month. Okay, we also have July. Why would July be important? Anybody? You got it, Jim. Yeah, July is number 7, right? What does 7 represent? What does 7 represent? 7 represents change. Okay, 7 represents change. So July is a very pivotal month. So after you get past the 4th of July holiday, it's funny how the 4th of July is celebrated in the United States, right? Did that month, 4th of July, change anything as far as history goes? Absolutely. Right? Absolutely. Revolutionary War, yeah. Changed the whole world as we know it. Okay, so we know July is very, very pivotal. Remember that chart I showed you guys earlier where I went long? I said, here we had a 21 count. Head and shoulder top was in place, but we decided to go against it. I put out a long trade there. I went long the S&P, and we had that huge move, almost 100 points in the S&P in a week. All right, that was in the month of July, pivotal month. All right, that was also another factor. When you take Advanced Cycles course, you'll get to learn how a lot of times I can predict where market turning points are going to be. It's not 100%, but I've been fairly accurate for many, many years, and hopefully I could do it for many, many more. Okay. Jim say, Nick, have you measured any of these years from the 1976 birthday? Yeah, I've done a lot of that. That's more Advanced Cycle stuff, but I definitely use that date a lot. Right here we have 70 years from 1930. Okay, so if you go 1929, 1930, we had a crash into 1932. 70 years from 1930 gives you what year? 70 plus 1930 gives you 2000. What happened in 2000, Brandon? What happened in 2000? Yeah, a crash, right? Tech wreck, yeah, internet bubble, all of that. Yep, that's exactly it. Then we had 1932 as a stock market bottom. What happened in 2002? 70 years later, stock market bottom. Yeah, 2002, the market bottomed, right? Got the higher low in March 2003, and the rally started. Okay, very good. let's go back for 1 minute. So we have 1937, which is right here. 1937. Anybody know what happened in 1937? Stock market crash. Yeah, stock market crash. 70 years plus 1937 gives you what? 2007. Very good. Yep, 2007. Was that a pivotal year? You betcha. October 11, 2007, the stock market peaked out. Okay? Stock market top, 2007. Big time year. 1987. Add 21 years to the 1987 crash. What do you get? 21 years to the 1987 crash. You get 2008. Was that a pivotal year? You betcha. You betcha. Okay, that was a huge year. All right? Market was very volatile. Seen some major declines. Big time sell-off. 2000 top, 2007, 7 years. 2000 top, 10 year, add 10 years, you got the 2010 flash crash. Okay. Market bottoms, usually 3.5 years, usually get top to bottom. Bear markets rarely last more than that time. Okay. 2002 low and 2009, also 2002 low plus 7 gives you the 2009 low. So again, you can see 7, very important number. What does it represent? Change. Yeah. So short-term cycles, you always want to watch 7 days, right? We know that's a week. 7 weeks, 70 weeks, 70 years. Okay, 70 months would be important. All these 3.5s, and again, they're very important. Now, real quick, just to go back for a second. In order to tell the market was going to top out in October 2007, okay, I'm going to pull it up on my charts here. October 2007, it was a hard thing to do. In fact, in 2007, I was getting short constantly and then getting stopped out. I caught the February top, I caught the high in July, and then I said, this is it. Everything happens in threes. It has to be October. But it wasn't until I was doing some reading and doing some research that I realized when it was actually going to be to the day. Now, real quick, do you think 700 years is going to be important? Does anybody think 700 years is going to be important? Absolutely. So if you take 2007 and you minus 700 years, what do you get? You get 1307. Does anybody have a clue that has not taken this webinar? What happened in 1307? Let me see my history buffs in here. No idea? Okay. Crusades? Close. No, not the Magna Carta. 1307. In 1307, the Knights Templar were persecuted by the French king. 1307, the Knights Templar were persecuted for heresy by the French king. Does anybody know what day that was? Anybody know what day that was? It was Friday the 13th. It was Friday the 13th. The market topped out on October 11th, 700 years later. Now, why would that be important? Knights Templar, heck, they were like a religious order. What are you talking about? That's where people get it wrong. The Knights Templar were not a religious order. They were, yeah, they were a religious order. They did have stuff going on there, but they were the bankers, the first global international bankers ever in recorded history. So if you wanted to go from, say, Rome to Jerusalem, and you had, 2 pounds of gold, or just say you didn't want to bring that on your trip, you would deposit it with the Knights Templar in Rome. They'd give you a receipt. They'd write your name down in a book. And then you would go to your journey. You'd be able to pick up and retrieve your gold when you got to your destination. This way you didn't get robbed by bandits. You didn't have to travel with it. You felt more secure. You just brought what you needed for your journey. If you needed a loan, you go to the Knights Templar. All right? They would make loans to everybody. And they were international. They were in France. The French king owed them so much money, he did not know how to pay them back. So what did he decide to do? Kill them. What kind of crisis did we have in 2008? What kind of crisis did we have in 2008? An international banking crisis. subprime. All of the things were just going on. Financial meltdown. Great, Vishal. Well said. Right? Banks under pressure. It was a financial crisis. It wasn't a crisis because some guy was, not going to work. It was a banking crisis, right? The system started to break down. People didn't trust each other. Confidence was lost in the financial system. Okay? It was a financial breakdown. And the last financial breakdown that happened was when the Knights Templar were persecuted 700 years earlier. That's how I found out the date in October. I said the market will top out by Monday. I put that out Wednesday night. I said if not tomorrow, market will top out by Monday. And sure enough, 700 years later to the day, I predicted it. People were saying, Nick Santiago, that guy is crazy. And I didn't tell anybody. It's because I'm looking at the Knights Templars date. I just said, hey, market will top out. You can believe me or you can't. I'm going short. And that's how it happened. That was one of my greatest discoveries ever. But one thing you're going to notice about this business, the longer you're in it, you become almost like an archaeologist. You're always digging for more information. You're always looking at patterns. You're always looking at different aspects in the market. You're looking at different cycles, whether it's new moons or full moons or different things in the market. It's constantly pulling and tugging. You're always, always digging. You're never getting bored. There's no such thing as boredom in this business. You're always, always, always working and looking to find out more information. Okay? Scott saying, Nick, that's pretty hard for me to believe they are connected. That's fine. Listen, everybody will have their opinion, but I made a fortune off of it, and that's the difference maker. And in the interim, I was able to help a lot of other people that were members. The members here were able to make a lot of money. And even in 2009, when we got to the bottom in March, I did a radio program, and I told them, I said, well, the stock market, bear market will be over in very, very soon. We're going to bottom out. And they said, when? I said, well, probably the first, second week of March. And I said this in late January. And they said, well, what are you going to do? I said, I'm going to buy financial stocks. And they laughed. The guy laughed on the phone on the radio program. He laughed at me. And sure enough, I did it. Just like I told them in August of 2007. I was on a few radio programs, and I told them, hey, Citigroup's going to collapse. Countrywide's going to collapse. All these companies are going to collapse. I gave them a list of, a laundry list. And it all happened. It all happened. So, I mean, we don't have to believe it, but, there are a lot of signs out there. Maybe you don't believe in sevens, you don't believe in threes or multiples, but the ancients were talking to us, and history repeats itself. Okay, that's the problem with man, is that, we have a short-term memory, and, we actually refuse to learn from the past. That's why we just constantly repeat our mistakes. We're in wars every 20 years. Can't find peace. It just still amazes me. But anyway, that's how we did it. Now let's look forward to 2015. All right, let's go to the daily chart. Now, if we look at 2005, which is a cycle I like to really look at closely because it's a 10-year cycle earlier. Markets love to repeat those 10 years, right? We just talked about 10. 7 plus 3 is 10. Let's just go back to 2005. And what you're going to see here, look at the volatility, right? First half of the year was very volatile. Then, came middle of May, late April, markets started to move up. Then we got to around August, and we got a lot of volatility again. Well, it hasn't been the same way this year. Let's just fast forward to present times. But let's look at 2015. Right out of the gate, started with volatility. First week of the year was down. In fact, the first month of the year was down. That's a rarity. Normally, when you're down the first week of the year or the first month of the year, you have a negative year. However, this is a little bit special. This is a 5-year of a decade. Now, if you've ever followed my work, I learned from W.D. Gann many, many years ago, the 5-year of a decade is never a negative year. We have never had a down year in the 5-year of a decade, ever, in the stock market, ever. So we know we're going to get volatility. We know we're going to get sell-offs, but you can buy the market if you can find the right support levels, okay? If you can find the right levels, you can buy the market. Now, you guys know from today, if you follow all the rules and you follow everything that we showed you, you guys can find the trend, you can find the buy points, and you can get into equities at the right levels, okay? 2005 presents tremendous, tremendous buying opportunities if you could find the right bottoming levels. Now, we're in the month of May. We still should get some fair volatility, but theoretically, the market should go up into mid-June, potentially early July. That's when I'm going to be very much more cautious on this market. And then that's when I'll start to look for a lot of shorting opportunities. Okay. Right now there are shorting opportunities out there, but they're probably a handful. They are not coming in abundance. But that's when we need to really, really be careful when we get to the second half of this year. When we get past the 4th of July holiday, I think traders are going to really need to be concerned that the bull is going to end to a certain degree for 2015. But it will ultimately lead to a buying opportunity. Then when we get toward the latter part of the year, we start to get bullish again. Okay. Yeah, Lucas, that's true. 666, 2009 low in the S&P. Scary stuff. Okay. A few other questions here. Leo saying, Nick, how do you put the days together for any pivotal point when there are so many major events and so many combinations? Do you look for multiple cycles? Yes, that is one of the things I do. And if you're interested, Leo, probably next month or the month after that, I'll be giving out the Advanced Cycles course. So if you like this little part on cycles, you'll probably love the Advanced Cycles course, because that's where I explain how we find pivot dates. That's where I'll explain how we look for turning points. I'll talk about the astroscience. There's a lot more behind it when we get into that part of it. It'll be somewhere on latter part of the year, but there's going to be buying opportunities throughout the entire year. 5 year of decade, you do want to be a buyer of the market at certain points, and the first half of the year is the bullish half. Okay. All right. Anybody, any questions about that? Because I'm going to show you guys how I set up my screens. Okay. I'm going to show you how I scan for stocks. All right. So here, let's just move this all to the same stuff. Link to all. I'm going to put daily, weekly. Let's open up a new chart. Let's go monthly here. So when I scan for stocks, I'm just going to show you how to do it. Here I have the daily, here's the weekly, this little chart is the monthly. One of the things I like to do to look for trade setups is I'll just go through my stock list. So here you can see, here's my list. And what I'll do is I'll just scan through it. I'll click it, and all these time frames pop up. Once the time frame pops up, I'll look for the setups. So I'll look and I'll see, oh, look at this. There's a breakout here. Monthly chart, what's that telling me? Is it max extension? But I'll just scan through the charts just like this every day. So take a look at LinkedIn. I say, ooh, LinkedIn, let me look over here. Oh, the monthly chart looks interesting. Let me pull a fib retrace. I'll go to pivot low. I'll go to pivot high. Oh, look at that. LinkedIn's coming up to a 618 at 189. Prior pivot also. I think I could be a buyer at 189. So you see how I'm starting to look at different levels, different charts? Okay, that's how I scan through it. First Solar, I'll look through the charts and I'll say, ooh, look at this. It's holding this level here. I can run a fib retrace there. Ooh, it's a bearish pattern on the daily. Ooh, the monthly's not so bad. Right, let's run a fib retrace on this one. I'll look and I'll say, oh, it's at 382. No wonder why it held up. Okay, so this is what I like to do. I like to look at all these time frames simultaneously. Now, obviously, I have 4 screens on this system, and I have another system with another 4 screens. So I'm running 2 systems simultaneously with 8 screens back to back. But one is predominantly just for execution, which I like to keep on a separate computer. E-signal charts I keep on this one computer. Okay, but this is how I look for stocks. I could do it so quickly, so fast. People are like, how do you guys find all these trades? I'm always looking. Look at STX right up into a bow tie necktie. That's a resistance level. That's a weekly chart. Then you get in the pullback. So I'm always looking at different things. Now, obviously, I'm not going to do it here, but normally I have my 20, my 50, and my 200 moving average in here as well. Okay? But you just go through all of these charts over and over again, and you just see what else is out there, right? So you could see a stock like, say IBM. Here was max extension. Put the bottom in at 150. That's also a big halfway point between 100 and 200, so 150 is a big, big number. Okay, and this has had a nice bounce, nice retrace back up. Where could this go? Maybe it goes to 180. That's where you're going to hit resistance. You got gap fill at 182. Okay, so 180 to 182 is going to be a huge resistance for IBM, possibly even a shorting opportunity. Okay, we go back, we look at triple Qs, we look at eBay, look at Twitter, right? Twitter's coming down to a green bar low. Green bar low is at 36.92. Usually green bar lows or inside bars get pierced, right? So you'd look at 36.20. Somewhere around there for potential low in Twitter. Western Digital, another stock, high, lower high, that's bearish, makes a lower high here. This can go back down again. How high could it go? Maybe 101, 102, and then it's pretty weak. So we're always looking at different things on the charts. Okay. Yeah, it's all the same stuff, Doyle. We just, I'm just showing you guys how I scan through it. Right? So you guys know what to look for now. I mean, you guys now have in your arsenal all of the time counts. You have moving averages. You have gap windows, retraces. You know the patterns like head and shoulders, wedges, consolidation. You guys know drop and pop. You know pivots to a low. You know trend lines now for identifying breakouts and breakdowns. You guys have a whole army of tools now. Yeah, I didn't put it in there, Jim. I just made this chart right now. I didn't get a chance to put it in there. I'm just showing you how I scan for all the different charts. Okay, but you guys now have a whole arsenal to look at different equities, okay, and what you should look for. The one thing I got to recommend that you do is take it slow. You take it real slow, study, get the study material, look it over, get your actual charts out, you start practicing, practice, practice, practice. When you're applying anything that you learned today, you start out with small share size, okay, and then you can always increase your share size as you get more confidence because it's all about learning and it's all about having confidence in what you're doing. Once you do that, sky's the limit of what you're capable of. We've taken traders that have never traded before and now trade bigger accounts than I do. That's the truth. So again, you take this stuff that you've learned today, take it slow. I know it's a lot to take in. We've gone almost 8 hours long today. That's okay, Susan. That's okay. Everybody's got to start somewhere. And I appreciate your honesty. Susan's saying she didn't even know how to short a stock. That's okay. When you short a stock, you're borrowing it from your broker. Then you're going to return it when you buy it back, hopefully at a lower price, and you pocket the difference. Okay? Mark saying, if you offer any one-on-one coaching, I mean, I have done it before. I do have a few people that I do it for. It's a little expensive, but a couple institutions have me on retainer for now. But I've done it. Yeah, Dan Sanick, you mentioned before you use 3 methods to find levels. Well, those are mathematical calculations. I don't share those. I don't give those out. Brandon, have a great day. I'm glad you can make it today. I'm glad you enjoyed it. Glad you loved it. I can't ask for more than that. Tell your wife we said happy birthday. Don't get in trouble. Scott saying, Nick, would you say you've made more shorting or going long in your career? Well, in 2008, I shorted way more. Since then, it's been a harder market to short. So recently, I would say I've gone long much more than short. I'd rather be long right now with all the liquidity in the system. Okay? Long as there's a lot of easy money out there, that always favors the upside. And if you guys come over, take the Advanced Cycles group, I'll explain the business cycle to you. I'll also explain how, when I bought real estate in late 2011, it was a real good time to get involved. I bought my house for pennies on the dollar. It's over doubled, almost tripled. You're welcome, Suresh. I'm glad you enjoyed it. Yeah, we might do something like that, William. We were talking about doing one like a destination type seminars. So that's a possibility. But it was just a lot of work. It was just a lot of work. It's on the website, on the Advanced Cycles course. You can find out all the information on the website, prices and everything there. Les is asking, Nick, can you tell me your favorite pattern? By far, inside bars. Inside bars, I've made more money off inside bars than anything else. That's why I spend so much time on it with you guys. Lily saying, Nick, how do you know if a moving average is minor or major? It's easy. If price is coming from an extended point into the moving average, it's major. If price consolidates above the moving average or near it, that's minor. Remember? You'll study those notes, Lily. You got to study them. It's all in there. Okay? Randy saying, Nick, what do you think about real estate now? I still think it's okay. I think you still got probably 3-4 more years for real estate to hold up well. Lucas saying, Nick, I know Joy's an options alert. Do you think you could share with us? Yeah, I mean, sure. Look what you got for Joy. Let's just move this over to weekly chart. What kind of pattern is this? I mean, you don't even need me to tell you this one. What kind of pattern is that? Down bar? Anybody? Inside bar. All right, let's look at the weekly chart and the monthly. It's not extended or anything, so it could still have more downside, all the way down to this, 35, then 30, and even lower. Well, I mean, right now, if you look at the weekly chart, just calculate this, right? So right now, you'd be looking at, basically double bottom. 37, 38. You'll get it tomorrow, Scott. Maybe after the close. I'm not sure. If my assistant gets into the office, you'll get it tonight. I'm just not sure when she'll be in there. Okay. Yeah, that was Gareth on the VLTC, Brian. Awesome call. We do everything online, Imad, at this stage of the game. We did do an in-house call, of course, at our trading room, but we only did that once. That was when I gave the Apple call to them. We did that for a week in-house. But we'll probably do something abroad, I think. I'm not sure if we're going to do Asia or the Caribbean, but we are looking to do another one later this year, maybe early next year, abroad. Forgive me if I'm missing anybody's questions. There's just hundreds in here. So if I'm missing anybody, forgive me. Oh, Scott saying, Nick, do you think we'll be able to trade during a financial meltdown or markets will be? No, I think you'll be able to trade. 2008 we traded. We did it with great success. So I don't think there'll be any problem. Plus, hopefully you're on the right side, so you're not going to worry about that. Yeah, Netflix is still a strong stock. Let's just go over that one quick because I know a lot of you are asking about that, and I get emails about it too. So it's getting overbought. It's getting extended. But remember, we're at a new all-time high here, so we don't have we can't use a max extension for this one, right? Because, you know, the moving averages now, the last one we had was here. So, I mean, this should go to 650. I don't see why it won't. At least that, if not higher, because the moving average back here was only $225. Now the moving average is 400, so this can actually go higher. Okay. Hard to use a max extension for this one. All right. Yeah, I just like looking at dollar yen because the institutions are in it. So I know as long as the institutions are in dollar yen, you know, they're all looking for dollar yen to go higher as well, and then more liquidity will come into the system. Mike M. saying, Nick, I have a question about resistance support into candle bars. Often we look at resistance into red bar open versus high and support being green bar open versus low. Can you explain? I'm not really sure I even understand that question. You know, do you have an example or a chart I could look at? I don't even know what you're really saying, to be honest. Forgive me, Mike. I always try to help you as much as I can, but I'm not sure what you're even asking there. So you're talking about markets moving up into red bar highs? Let me just go to well, here market went into a green bar low right here, and you got a little bounce. Then there's another green bar low, and you got another bounce. I'm not really sure exactly what you're referring to. You're welcome, Susan. Take it slow. Just take it slow and take your time, and you'll get it. You know, I know you're new to technicals, but you're going to be fine. Like saying, Nick, when we look at day trades, remember you always talk about the opening red bar being resistance. Well, it doesn't matter. You know, everything is, anytime you have a wide range bar, so see here, what did price do? It went into it, consolidated, then it made a little bit of a move higher. Okay? So anytime you got a red bar, there's always going to be some resistance there. That's what markets do. They consolidate to go into those, right? That's just a normal ebb and flow. But I'm not sure if they always want to test them, right? So you consolidated here, you push back up, then you pull back a little bit. See how it tested the red bar high, then it got through there with mega volume. Now it wants to test this high. And that's what markets do. You know, it's always a test. No, it's always the high of the wick. Everything's the high bar, right? It's not the body. Only the bodies we're using for narrow body. It's always the high wick, always. We're going to try to present a recording for you guys, Nick, and we're going to have it on a link. We'll give you guys a link to view it, hopefully, okay? Coming to us from England, awesome. It's late over there, but great. I'm glad you were able to attend. Thanks for coming with us. You're welcome. You're welcome. Anything's possible, Jim, unfortunately, you know, I mean, but I like that you're out here learning everything right now. That's the way to do it. You're welcome. Appreciate all the nice words. Again, we'll get all the information out to you. The slides and everything will be out to you shortly. Okay? All right. I'm going to wrap it up. I want everybody to have a great weekend. God bless. And again, it was a great class today. Great class. We had a lot of fun. And we'll do it again. All right. Take care, everybody.